Hi, this is Christine Thompson, Baird and Warner, lead agent on the CT team there. And oh my gosh, I was supposed to do this at 12:15 today. I'm a little bit late. But anyways, here I am. And thank you for watching my show. I usually have it say weekly update on the side, but hey, I'm your real estate advocate, and this is why I'm doing the show, to give you information. So let's fly through this. It's been a crazy day for me, so I apologize that I totally forgot to get my show starting at 12:15. Just a crazy day. But anyways, alrighty. So let's get started on here, and I'm going to just keep rolling through here so you can see what's going on. Now, as I always say, this is a weekly show, weekly update. So I'm going to show you what happened last week and what happened this last recent week. So comparing the 2 weeks. So last week, this is what I reported. 77 new on the market, 81 under contract. 77 is probably not unique new homes on the market. So we definitely have a shift here of more going under contract than coming on the market. Inventory is low, you guys. This is for all of Naperville for detached homes and attached homes. This is crazy. So this week, 80 new, again, not all unique, and 84 under contract. So we are still seeing the balance leaning towards more demand, not enough inventory. Average list price. This is for all detached homes in Naperville. We saw that a week ago, we saw the average list price was 805 and under contract was 511. This week, we're seeing the active average is 758 and under contract is 623. So perhaps homes last week when I showed the 800 number, maybe some of those came off the market, bringing up this under contract average up, okay? And since they fell off the market, we see the active average going down because it is in a lower price range that most of these homes are getting sold. Average days on the market a week ago, 94 days. Again, that was reflecting homes in the 800 range, and under contract, 63 days. This week, 80 days only. So you're seeing lower the price, the quicker they're selling off the market. And then under contract was 69 days. Again, this is all seems to be, in scale with price point. And here is just a breakdown of numbers behind those bars if you want to see it in a different way. You can pay attention to LP stands for list price. So the average list price for sold listings was 414. The average sale price for those homes was 404. So we see about a 10K difference on average between list price and sale price. Now, this is probably the last list price that these numbers are being pulled from. I would have to dig a little deeper to give you original list price because some of these homes may have been outliers sitting on the market longer. It's nice to see that 39 days was the average market time, though. That's pretty good, okay? Seller's market. This is this week. We see the average is at 95 days. But if you look from last week, the average was 414. This week, 502 for the average list price of these sold homes. And the that was the average sale price. And 502 average list price for the sold homes. The average sold price for the sold homes was 492. So again, we're seeing about a 10K difference. The market time up a little bit, but it's a little bit higher price range too. All right, so there's that. Now, this is what I love. This is very interesting. Last week, 3.31 was the average number of showings per listing, went down to 1.9. All right, so but look at this, number of listings, pretty close, but the number of showings dropped off. Hey buyers, are you waiting for more homes to come out on the market? Or maybe you've seen all of these the week prior that you didn't feel like you needed to go out and look again because not much has come on the market. Come on, sellers, let's get out there. Who cares about the Super Bowl? Just get out there if your house is ready to show. Last week, 42 was the action index needle. Really nice seller's market. And we're still at 42. This is why the screen doesn't look like it changed, because it's exactly the same. So we have remained at 42 for this market action index needle. That is definitely a seller's market. You are at an advantage if you're getting on the market now. Week ago, I reported 2.89 for the fixed conventional and 2.84 four. I don't know. I gotta put my glasses on. I can't read these little numbers. So you might want to go back to YouTube video and watch this later so you can stop the screen and blow it up. But FHA 2.64. Oh my gosh, this is great. That was a week ago. 2.6 for FHA this week. Oh my gosh, this is a fantastic. Get out there, you buyers. And 2.88 for the 30-year. What was last week? 2.89. Moved a 0.01. Big deal. So essentially the same. So I know a week ago we said, oh, the Fed's raised the rates a quarter point, but we can see it's not affecting the consumer rates that much. It really hasn't. I mean, we're below 3. And I remember a few years ago saying, oh my gosh, we're below 5. We're below 4. Below 3, this is insane. You have got to get out here and buy a home. Get a second home, you guys. Get a second residential home so you can capture this really good rate. Maybe it'll be your retirement home. Just jump on this if you can. So just take a step back and look at what's happening on the market, what to predict and all of that. Well, this is a great way to look at what's going to happen with home prices. First of all, I just showed you the rates are good, and I just had a sales meeting, and our lender said that she's always looking at the predictions, and in her industry, the experts are saying rates are going to stay down probably through 2022. That's awesome, right? And I like to look at this graph because what this means to you is in those years leading up to the big bust. So in these years of 2000 to 2005, leading up to the housing crash, it was inflated home appreciation, totally inflated. These are insane numbers. The last 6 years, we've had more comfortable inflation on home prices. So you'd have to have this to happen in order to have a big drop. So by having comfortable increase through all these years, it's hard to have a big crash. There's nothing to crash from. This is another perspective. This is showing about equity in a home. All right. How much did people have that they were cashing out on the equity, like saying, hey, we got some equity, the home prices are going up, so let's do a HELOC and pull a bunch of money out of our house and buy a second home or a car or go on a fancy trip. $824 billion people were taking out from the equity they thought they had in their home. $824 billion. That's a lot of money people were pulling out of their homes to use for other stuff. What has it been in these 3 years? Just 247 billion. Vastly different number, you guys, vastly different. So between the home prices only comfortably raising on value and people not going crazy using their house like a cash machine, these are indicators suggesting it's highly unlikely we're going to have a big crash in the market on home values. So for you investors out there, if you're thinking, well, I'm going to wait a couple of years, why? Get out there and get the better rate if you're using lending to do it. Even for an investment purchase, the rates are pretty good. I just refinanced an investment property I have, and I got my rate down. So get out there, and even if you have to use an investment loan, you're still going to get a better rate than if you wait, because after 2022, who knows where it's going to be, and it looks like homes are going to comfortably continue to increase on value. So don't wait to look in the rearview mirror. All right, you wait a couple of years, you might be looking in the rearview mirror saying, I should have bought that investment home back in 2020 or 2021. I mean, all right. So just heed my advice. Look at the information. I hope you have found this very helpful. I really do try to provide this information to you guys. And if you know anybody else that is thinking of buying or selling, please share this with them so they can get an idea of what's happening in the market so they can go in wisely and educated. And I'm happy to refer lenders if you want to talk to a lender and get a pre-approval, find out what's going on for you personally, what rate you can get. I can definitely help with that. Thank you for watching my weekly show, and I hope you were able to catch it live. I understand if you couldn't, since I posted it at a different time than typically posted, but remember, you can go to YouTube and catch this on YouTube any time of the day. This usually posts within for 24 to 48 hours afterwards, and you can watch them all day long and compare them against each other. Okay. So I hope you enjoyed watching this and you have a fantastic week. I hope your 2021 is getting off to a really good start. You guys all take care. Bye-bye.